But let's shift focus now to talk about the commodity markets. Manisha Gupta is here. Manisha, what's the one commodity you're tracking today?
I'm looking at the agriculture space today, and we have seen the food inflation in India and the global markets as well try to come down and consolidate as well. But I want to talk about the gainers first, and we all know on how the edible oil scenario for this year has been. So soybean seems to be closing this year in the positive, up by nearly 15%. Sugar continues to be a beneficiary there because we are looking at Indian concerns in sense of exports, and the global output also is on the weaker side. Corn up 10%, and rice clearly is an outperformer when you look at all of those staple food items, up by nearly 19%. And the reason for rice prices gaining up is because we are looking at, one, the price is trading at a June 2020 highs. That is because the global rice production and consumption, both of those numbers have seen a decline. But as you can see, the production has taken sharper hit on the lower side, is the reason you have seen that build up in sense of premium in case of the rice prices. Talk about the losers in sense of agriculture space now, and coffee has seen a 29% decline in this year. The Europe coffee demand in that sense has continued to decline, and that is weighing. Rubber is a story we've been talking about so many times because of the automobile, footwear, gloves, all of that demand has been declining as well. Tea as an industry, it was a difficult year for them. Lower production and prices declined by 5% as well. And this is the edible oil pack, which has seen a good amount of profit taking from the kind of highs that we saw in the month of March to May today in this year. So 11 to 20% of a decline across that sector there. And then there have been some commodities which were decoupled when you look at the Indian and the international markets. Wheat is one example. In the international markets, we are down by 2.5%, but in the Indian markets in this year, the wheat prices have gained up by 28%. The reason being that last year we saw higher sowing but lower production because of weather, and this time around as well, the weather is a bit of a concern right now. The Indian government wheat stock last year was 37.8 million tons. At the same time, like this year, it is right at 19 million tons. So we are less than half on where we are in sense of wheat stocks, and the low reserves could actually curb government effort to release stock, is the reason you are looking at record high wheat prices in the Indian markets. The new crop arrivals only would come in by March 2023, and that keeps the prices on the higher side. The second commodity is cotton, which also has a big decoupling with the international markets. Global markets have seen a decline by 23%, but the Indian markets are up 20% and to a premium of the international markets as well. This is because we are looking at global cotton prices, while they're trading at a 22-month lows in the international markets. For the Indian markets, we still are trading at a 6-month highs there. Industry is asking for import duty reduction. We're looking at weaker textile export numbers as well, and that is what is weighing onto the cotton and the textile industry for India.
Okay, thanks a lot, Manisha, for that. Well, moving on, Infosys co-founders have gathered to mark 40 years since their inception. Nandan Nilekani, who is currently the non-executive chairman of Infosys, says he will pass the baton to someone